So welcome back to video number 2, and in this video I'm going to be sharing with you the silent income killer number 2. This is a big one, and once again I just had a big epiphany on this one here when it was dawned on me too as well. Like, wow, that makes a lot of sense. So what I want to share with you is, before I give you solid income killer number 2, is I just want to talk a little bit about the cash flow quadrant. So if you're not familiar with Robert Kiyosaki, he's definitely someone you want to look upon, because he wrote the book Rich Dad Poor Dad, and he also wrote the book Cash Flow Quadrant. In that book Cash Flow Quadrant, they talk about the 4 levels of, well, not really levels, it's really just categories on what cash operates and will always circulate in. So you can easily find out which category you're in by really just asking yourself, what type of people are you hanging around? I don't mean it in a bad way or a condescending way. It just literally lets you know what category in the cash flow quadrant you operate in. And there's 4 categories. And the reason I want to speak on this, because it leads us right into the solid income killer number 2, which is taxes. Okay, so just hold that thought real quick, okay, on taxes. Because I'm not saying avoid paying taxes or anything of that nature. But I also do want to reveal to you or bring that level of awareness, right, that there's one of people in these categories that pay the most in taxes. So that's what I want to share with you, because it's very eye-opening. So the 4 quadrants, you got employee, which is an employee, self-employed, or employee, they actually work for someone. And then you got self-employed. So that's on the left side. So you got E for employee and S for self-employed. The only difference between the two really is just that employee works for someone or works at a job, and they're normally a W-2 employee, so they're getting taxed out of their paycheck. And self-employed, as a 1099, is typically they're self-employed, so they're typically working for themselves, or their contract work, right? But here nor there, they both kind of fit in that same category, or that same quadrant on that left side, meaning that if they don't show up to do their job, they don't get paid. They trade their time for their money, okay? Not a bad thing. We all need jobs, so I get it. Once again, it's not the bash, it's to bring a level of awareness. The right side is the B for business owner and the I for investor. So a business owner pretty much owns a business, and the business runs for him regardless if he's there or not. So if you go to McDonald's and you ask for the owner, 9 times out of 10, the owner of that McDonald's is not there. That business is running regardless if he's there or not, because he's got systems and employees in place to run the business for him. And then you have I for investor, which is pretty self-explanatory. You put your money into something and you get a certain rate of return on your money, right? So that's pretty cool, because on the right side, the difference is it's more leveraged. A person doesn't have to trade their time for money, right? The business is operating regardless if they're there. And then money, which is our ultimate goal, how can we have our money working for us versus we working for the money, right? Doesn't that sound cool? I would always love to be able to generate money if I don't have to necessarily work for it, right? I don't mind working hard, but you know, that's my thing. So anyways, with that being said, going back to the solid income killer number 2, employees, people who work a job or and get their taxes taken out of their check, typically employees are taxed anywhere between 20 and 30%. Now, if you work a job, you can relate to this because you've seen a lot of your check be taken away from taxes. I remember when I used to work a job, I thought overtime was super cool, right? Because I was like, okay, I'm gonna work overtime and I get double pay, you know, and especially on the holidays, it was like a triple pay or whatever. So I was always like, you know, I want to work 60-hour weeks, because the extra 20 hours I'm gonna get paid double pay. Well, when I got my check, I was super pissed most of the time, because the taxes, I got taxed on that regular 40 hours. And then the money that I made on overtime, it seemed like it got taxed even more, which it did because my pay rate increased. So it actually took out even more taxes from my check. So it actually felt like I worked all that overtime for nothing, basically, because it took so much tax out of my check, right? So my point is a person with a W-2 job, maybe you can relate and you look at your check and it feels like 20 to 30% of it is gone in taxes. Well, 2 things I want to point out is, number 1, W-2 employees pay the most in taxes, the most, right? And how do you alleviate that or not pay the most in taxes? Well, the reason I broke down that cash flow quadrant is because if you actually own a business with the intent to make a profit, you actually qualify for tax expenses. And some of those expenses are the same expenses that you have on a regular basis that you just don't know that you qualify for. So like driving your car, the miles on your vehicle, your cell phone bill, some regular expenses that you're already doing right now, traveling, food. There's different expenses, right? I'm not a CPA or expert. You definitely want to get with a CPA or an expert to find out what you actually qualify for. And we'll share that more on how you can do that here within this membership site. But I just wanted to kind of once again talk about the solid income killers, because if you could actually minimize your taxes, not paying, no, I'm not saying not pay them, but minimize your taxes, where you can maybe drop that down into a 15% bracket, or maybe even a 10% bracket, maybe in the single digits, who knows? Wouldn't that be a lot better than paying 20 or 30%? So that's some things that people just don't know or really realize, that actually owning a business, regardless if it's profitable or not, you just have to have the intent to make a profit. Now you qualify for tax expenses, which can help you lower the amount of taxes that you're paying, right? So that's another solid income killer, which is the taxes that just a lot of people just don't know, specifically W-2 employees, because they're the ones getting taxed versus the person who owns the business is saving money on taxes for the simple fact that they own a business. So just to recap really quick, the number 2 solid income killer is taxes. And the majority of people who get taxed the most are people who are actually working a W-2 job, okay? This is the last thing I'll leave with in this video, because I can go on and on. I'm very passionate about the topic. Is the one tax that we can actually control is our income tax. Let me prove it to you. You got state tax, federal tax, liquor tax, street tax, right? All these other taxes, and the only tax that you have control over is your income tax. So all these are just tax codes. So, you know, you got 501c3 for nonprofit. You got 1099 for self-employed, right? You got W-2 for people who are working jobs. Now, those are all just different tax codes, and you get to choose which tax code you want your income to be taxed in. So, I'm an entrepreneur. I choose to have my income tax in the 1099 category, which qualifies me for tax breaks because I own a business. When I used to work a job, I was in the W-2 category and so forth. So I don't own a nonprofit, but that's more like your church and nonprofit organizations. So they tell the government they want to be taxed in the 501c3 category. So what my point of this is out of all the taxes, the only tax that we have control over is our income tax. So if you're choosing to be a W-2, you're also choosing to pay the most in taxes. So with that being said, I just wanted to bring that level of awareness, so that way when we go into further videos, you can understand on how to overcome and pay less taxes by owning a business. So that being said, I'll see you in the third video. I'm going to reveal to you the third solid income killer. So if you thought this was good, you can't wait to see you in the next video. I'm going to share with you that third solid income killer. So hopefully you found this valuable, and we'll see you in the next video.